Welcome to Option Trades Today. I'm Tony the Baptiste, and I have a trade idea for you today, April 4th, 2024. But first, as we always do, let's take a look at what the market's doing. Even the S&Ps are up $30.75. It seems like they opened here and have sat here for most of the day. NASDAQ up 128, Russell up 19, and the Dow up 149. They're all up on a percentage basis around the same. Volatility in by 35 cents, 14.55, and bonds with unemployment looming tomorrow are up 7 ticks. Notes are up small. Bitcoin catching a little bit of a rally after selling off earlier, and oil finally having one down day. Having one down day over the last week or so. Gold down $3.40 also. But you know what? What I like to do now is take a look at my high option volume list. Of course, there are a lot of lists in here that you can go to. You can find the S&P 100, the S&P 500. I like to go to the high option volume list. At least that's where I like to start. I also like to click on this earnings on here so that I don't have any earnings. As you can see, earnings are looming in a lot of the stocks that we like to trade, like Netflix is coming on the 18th, as you can see here. Tesla's coming on the bottom here on the 23rd. A lot of stocks that we trade have earnings. One that does not have earnings and has a very high IV rank, an IV rank of 49, and over the last 5 days is up a little over 3% on implied volatility, is MU. Now it is down $1 today, and it has been meteoric in its flight as of late, especially since the beginning of March or so. But you know me, being a little bit of a contrarian here, I'm going to go with an omnidirectional, slightly bearish trade here. Let me explain to you what I'm going to do. No earnings. Earnings are in June, so we don't have to worry about that. I'm going to go to May options. I'm going to look at what I typically do when I'm doing a ratio spread. I said omnidirectional trade, so I'm going to look at a ratio spread. I'm going to put percentage of in the money here just to change that and show you the percentage of touch. It's usually about 2 times what the percentage of being in the money. So if something has a 25% chance of being in the money, there's about a 50% chance of a touch. A lot of times people will look at options and say, oh, there's 75% chance or a 60% chance that this stock with a 25 or 30, that this option with a 25 or 30 delta is going to be out of the money. There's no way the stock can get to that level. Well, there's almost a 50-50 shot that the stock will get to that level. So I'm going to go outside of that ever so slightly, make it a 60-40 in my advantage. I'm going to buy one of the 145s, a ratio spread, which makes it an omnidirectional trade, which I'm going to explain to you what I mean by omnidirectional in just a moment. And I'm going to sell the 155 call. Since the ratio spread, I'm going to do some number more than 1. Usually what I like to do is 2. You can see here I get about a 15-cent credit. Now, I'm not playing for this stock to go from 127 where it is right now up to around 155. This has 3 or 4 short deltas. I look at this trade as a short delta trade. I'm not looking for the stock to go to 155 where on this 1 by 2 I would make $10 on this trade. For the $2,000 in risk, I would make $10, which means $1,000. I'm sorry, I'd make 10 points. 145 to 155. The 145 call would be worth $10. The 155 call would be worth nothing. I collected a small amount of credit on this. You'd make $10.15 or 16 cents on the $2,000 in buying power. $10, 10 points means $1,000 in option trading. All right, so I'm not playing for that. I'm actually playing to collect this credit that I'm receiving. Now, that credit I'm receiving is too small to be worth my while with that type of outcome. So I'm going to sell an extra call here. I'm going to do 1 by 3. And you'll notice that I actually did this on the follow page, if you take a look, at around $1.46 when the stock was down around 90-ish cents. So I'm buying one of the 145s. I'm selling 3 of the 155s. That's going to give me almost 17 short deltas, $8 in theta decay, and my buying power effect is 3,200. Obviously, my buying power effect goes higher because I have that extra short unit in there. Now, the interesting thing here is, what is your break even on this? Because we have this setup. We got a high IV rank. We got a stock that's parabolic. It certainly is parabolic. I'm a contrarian. I'm going to play it from the opposite way. I actually would like the stock to be higher today, putting this trade on. And with the market higher today, maybe it's time for you to wait to put on this trade. But I'm, constrained by my time that I have to do this podcast. So I'm buying one of the 145s, selling 3 of the 155s, using $3,300 in buying power. Gives me my 16 short deltas. What's my possible profit on this? I'm looking to make $1 or so on this trade, as I am in most of the trades that I do here. You'll notice that the volume's good in here. The markets are good in here. This is volume. This is daily volume. A lot of call volume, as you can see here, versus some put volume that you don't see here. I don't look at volume and say, hey, is that a directional bias on anything? But it does show me that the stock is in play when there's a lot of volume like this on the stock. So I'm doing this for $1.46, trying to make a buck and a half on this trade. Why do I say a buck and a half, or even $2 or $3? Because, as I was explaining to you a moment ago, the stock could slowly, which is what you would want to do, slowly have the stock move up to 145, 150 area, which, listen, the probability of that happening as a touch is about 30%, 70% chance against. But look at what your break even is here. That's the interesting part. A lot of times on a ratio spread that's more than 1/2. This is again a 1/3. As I said, it's hard for people to figure out what the break even is. Let me break it down for you. Let's just assume that, for argument's sakes, the stock is higher. The 145 at expiration, that's 43 days away. The 145 155 call spread, max that it can go to is $10. You collected about $1.50 per spread that you put on here. So you have to add that credit on. You did that, and you have 1/3. So you're collecting an extra. You have 2 units here, right? So I already did the 1/1. Now I'm short 2 of these 155 calls. I'm short them for $10 plus the $1.46. Let's just say $1.50. That's $11 and change. That's why this green line is right around that 160. So you got $11 and change in total credits here, or possible credits that you could have. So your break even is up around 160-ish and a skosh. All right, that's my 1/3 ratio spread. It's got a good 94% pop on this trade. $8 in theta decay. My delta is short 17. If you ever want to see these trades before this podcast comes out, you can always go to the follow page. Click on Bob the Trader. That's me. You'll see MU is here. I did it earlier today when the stock was right where it is right now. So the stock is rallying a little bit from the last time I just mentioned it. $1.46 is my credit. If you click on it, I always try to put something down on there. A 1/3 omnidirectional, slightly bearish ratio spread. I say slightly bearish because there's no risk to the downside. You'll notice this green line goes all the way down to 0. Obviously, there's no risk to the downside. Maybe you can put this trade on even better than me. All right, everybody, here's a time where I tell you, please open, move, transfer your account to Tasty Trade. That's how we keep the lights on here. That's how we keep all this great content coming out for you. Please smash the like button on this podcast. If you want to write to me on there, I'd love to hear from you. If you want to send me an email, you always can. But you know what? You really should get your email answers from Tom at tastylive.com. After all, he's the one with all the answers.